Okay, hello everyone. Hi guys. Good noon everyone. So today we have to discuss module C marathon. So I'm going to give all the important questions related to module C, i.e. IFS everyone. So just please comment everyone. Everything is clear, audio, video. Okay, whoever is watching this session, kindly please comment about the audio and video of the class. Is everything is working good, working fine? Yes or no? Hi guys, hello. So let's start discussing this module C marathon, right? So we are going to discuss all the important questions related to module C. So the very first question for you all is, which among the following is called as non-intermediate financial institution? So the very first question is about the non-intermediate financial institution. We have PNB, we have IRDA, Insurance Regulatory and Development Authority, we have NABARD, National Bank for Agriculture and Rural Development, and we have SEBI, Securities and Exchange Board of India. So, which of the following is among a non-intermediate financial institution? Everyone, please answer this question, guys. Everyone. So, we know that the financial institutions, these are actually divided into three categories. So, we have regulatories, we have intermediate, and we have non-intermediate. Regulatories, like who are regulating the different financial markets, like we have SEBI, IRDAI, Reserve Bank of India. So these are what? These are called as the regulatory. Intermediate means the different commercial banks, okay, which provide loans and financial services to the customer, like we have SBI, PNB, Bank of Baroda. These are called as intermediate. And non-intermediate means the institution which provide financial aid to the corporate customers. So if there is any institutional which provide corporate aids to the corporate customer, then they are called as non-intermediate. Example, we have NABARD, we have SIDBI. These are non-intermediate financial institutions. So when we are going to discuss non-intermediate financial institution, it is actually NABARD. Okay, so National Bank for Agriculture and Rural Development. It is intermediate. They are regulatory. They are regulatory. And these are non-intermediate. Okay. NABARD. National Bank for Agriculture and Rural Development, established in 1982, and it has been established by the recommendation of Shiv Raman Committee. And NABARD is currently regulating all the regional rural banks in India. Clear? Done? Okay. Next. We have to choose the incorrect statement here. Everyone, choose the incorrect statement. Financial instruments are in the nature of financial product and services. These include instrument on the asset as well as on the liability side of the financial institution balance sheet. Now, second, financial instrument on the liability side of the balance sheet include the loans and advances and investments and placements and derivatives. And on the asset side is include the deposit, money accepted from the customer, insurance policies, mutual funds, etc. So we have to choose the incorrect statement here. Everyone, just kindly please like and share the video. Whoever is watching this session, kindly just please like and share the video to the maximum you can. Now, just please choose the incorrect statement here. Everyone, please answer this question. Choose the incorrect statement. Everyone. Financial instruments are in the nature of financial products and services. This include instrument on the asset as well as on the liability side of the financial institution's balance sheet. So first is the correct statement. We know that there are certain asset, there are certain liabilities of the financial institution. So first is the correct one, right? Now, second, financial instruments on the liability side of the balance sheet include loan, advances, investment, placement, and derivative. Now, understand this carefully. When we are talking about the loan and advances, these are liability for the customer, but these are asset for the financial institution, right? So this is not the liability. This is actually considered as the asset of the bank. So this is wrong, right? And third, asset side include deposit money accepted from the customer, insurance policies, etc. Again, this is wrong. So financial instrument on the liability side include all of these. So if we have to choose the incorrect statement, second and third, these are the incorrect statements. So B is the correct. So everyone. Okay, done. B is the correct answer, everyone. Done. Okay, good. Now, next question. The first commercial bank to be set up in India was Bank of Hindustan, Awadh Commercial Bank, PNB, or none of the above. Very simple question, everyone. Please answer this question, guys. The first commercial bank which has been set up in India was Bank of Hindustan, Awadh Commercial Bank, PNB, or none of the above. So the correct answer is what? Everyone, please answer this question. So the correct answer is what? The first commercial bank to be set up in India was. Everyone, please answer this question. Swarna A. Yes. So Bank of Hindustan was actually the first commercial bank which was set up in India. It was set up by the European companies named Alexander and Mason Company. So it was the first bank in India, but it was not the Indian bank. It was actually the European bank which was set up in India. Okay, Bank of Hindustan. Next question. We have to choose the correct statement regarding the pre-independence phase 1 of financial era. Means what actually happens during the pre-independence phase 1 of the financial era. During this phase, the Bombay Stock Exchange was established and it was Asia's first stock exchange. Then, the setting up of a central bank, namely Reserve Bank of India, was recommended by Hilton Young Commission. Third, the nationalization of RBI was also done during this phase. Now we have to choose the correct statement regarding the pre-independence phase 1. Pre-independence phase 1 means before 1947. What happened, right? Before 1947, what happened? Everyone, please answer this question. Just please answer this question, guys. Everyone who is watching this video, kindly please like and share the video and please answer the question. So, what actually happened during the pre-independence phase 1 of the financial era? Pre-independence phase 1. So, Jatpula is saying A, 1 only. And another B, Swarna is saying B only. Correct statement. Okay. So first, during this phase, Bombay Stock Exchange was established. Bombay Stock Exchange was established in 1875, right? So yes, it happens before 1947. So yes, second, setting up of central bank, namely Reserve Bank of India, was recommended by Royal Hilton Young Commission. Royal Hilton Young Commission recommended the establishment of Reserve Bank of India in 1926. According to that, RBI Act has been passed in 1934 and finally it has been established in 1935. Everything happens before 1947. So yes, second is also correct. Now, third, nationalization of RBI was done during this phase. Now, when we are talking about Reserve Bank of India, it was set up as a private sector bank in 1935, okay, with a paid up capital of rupees 5 crore. Later, Reserve Bank of India was completely taken over by Government of India in year 1949. So nationalization happens in 1949, which was after the 1947, means after the independence, right? So first and second is the correct answer because these two only happens before 1947. So C is the correct answer. Swarna is correct. Dheeraj is correct. C is the correct answer, everyone. Okay. Just please, everyone, like and share the video. Whoever is watching this video, kindly at least just like and share the video to the maximum you can. Okay. Now, next. Choose the correct statements regarding the post-independence phase second of financial era. Post-independence means between 1947 to 1991. What happened? Now, the year I have written, so it is the time period between 1947 to 1991. This phase commenced with the nationalization of RBI followed by SBI. The post-independence phase was marked by extreme turbulence in the financial market, which led to the closing of number of banks. So please just tell me the correct answer. Everyone just tell me the correct answer. We have to choose the correct statement here. Means between 1947 to 1991, what actually happens? Everyone choose the correct statement regarding the post-independence phase second of the financial era. Everyone please answer. Everyone guys. Okay, so first, it is the time period between 1947 to 1991. Yes, that is correct. Second, this was commenced with the nationalization of RBI. RBI's nationalization 1949, followed by SBI nationalization, State Bank of India. So State Bank of India's nationalization was in year 1955. Okay, so yes, that is also correct. Now, third, the post independence phase was marked by extreme turbulence in the financial market, which led to the closing of number of banks. Now, this happens during the pre-independence phase, means before 1947. And because of this, in 1926, the Royal Hilton Young Commission recommended the establishment of RBI, right? So this happens before 1947. So first and second is the correct answer. Third is the wrong answer, right? So yes, C is the correct answer, everyone. C is the correct answer. Okay, done. Knowledge. Swarna, Lucky, Dheeraj, and everyone who is watching this video. Good. Now, next question. Second phase of nationalization of bank took place in 1980. Now, during the prime ministership of Indira Gandhi, which bank was nationalized in this period? 1980, everyone. 1980. 1980, I am saying. Everyone, please answer this question. 1980. Swarna is saying D is the correct answer, and everyone else. The second phase of nationalization of bank took place in 1980. Okay. Now, at this time, Indira Gandhi was the prime minister. Now, you have to tell me which was the bank which was nationalized during this phase. Which was the bank which was nationalized during this phase? So, if you all remember, I have told you in 1980 there was the announcement that whoever or whichever the bank has the total deposit of more than 200 crore, these banks need to be nationalized, right? So if the bank has the total deposit of more than 200 crore, then that bank need to be nationalized in 1980. Now, at that time, when we are talking about the phase, six banks were nationalized. Okay, and the name of the six banks were Andhra Bank, Corporation Bank, Punjab and Sindh Bank, Vijaya Bank, Oriental Bank of Commerce, and New Bank of India. So these were the six banks which has been nationalized during the second phase, means 1980. So yes, Vijaya Bank was actually in 1980. Rest these are actually nationalized in year 1969. 1969, there was the nationalization of 14 banks which have the total deposit of more than 50 crore. Clear? Done? Good. Next, regional rural banks were set up during the First phase of development of financial system, second phase of development of financial system, third phase of development of financial system, and fourth phase of development of financial system. So if you remember the year, if you remember the phases here, then this question is very easy. Else you will find this question tough, everyone. And please at least like this video, whoever is watching this session. It's a request that kindly please like and share the video to the maximum you can. Like and share the video to the maximum you can, everyone. Regional Rural Bank was set up during which phase? Everyone. First phase of development of financial system. Second phase, third phase, or fourth phase? So the correct answer is okay. First of all, let's talk about the phases. First phase of the financial system development, it was before 1947, pre-independence phase. Okay. Now, second phase of the development of financial system between 1947 to 1991. Now, third phase is liberalization phase, means 1991 to 2010. And fourth phase was the post-global financial crisis phase, which was between 2010 to present. Okay. Phase 1, phase 2nd, phase 3rd, and phase 4. Now, the regional rural bank, the very first regional rural bank has been set up on 2nd October 1975, and the name of that bank was Pratham Gramin Bank, and it was recommended by Narasimha committee, right? So this was all the information. 1975 means before, if we talk about 1975, it means it is between 1947 to 1991, means phase second. So the correct answer is B. B is the correct answer, everyone. Done. B is the correct answer, everyone. Done. So the important thing is first, 2nd October 1975, Prathama Gramin Bank, recommended by Narasimha Committee. And for a regional rural bank, the contributions are 50% coming from the central government, 35% coming from the sponsor bank, and 15% contribution coming from the state government, right? So these are the capital contribution for all the regional rural banks. Clear, everyone? Yes or no? Yes or no, guys, everyone? Done. Next. Next is name the committee which recommended the nationalization of Imperial Bank of India in 1955. So I have told you this already. Name the committee which recommended the nationalization of Imperial Bank of India in 1955. Everyone, please answer. Name the committee which recommended the nationalization of Imperial Bank of India in 1955. Everyone. Imperial Bank of India has been recommended. Sorry, Imperial Bank of India has been nationalized by the recommendation of whom? Everyone. Sorry. Okay, she was saying B. Gorwala Committee, perfect answer. So when we are talking about, there were three presidency bank: Bank of Bengal, Bank of Madras, and Bank of one more, Calcutta. These banks were merged into Imperial Bank of India in 1921. Now, Imperial Bank of India has been nationalized by the recommendation of Borwala Committee, and then Imperial Bank of India has been converted into State Bank of India. So, actually, which committee gave the recommendation? It was the Borwala Committee which gave the recommendation. Clear? So, B is the correct answer, everyone. Done? Good. Next. Good, everyone. Which among the following is or are not true about the non scheduled banks? Which among the following is and are not true about the non-scheduled banks? First, non-scheduled banks are listed in the second schedule of RBI Act 1934. The non-scheduled banks are eligible to effect borrowing from RBI for their everyday operation. They are not eligible to become the member of clearing house. As such, their customers are hindered in being able to collect the checks. Proceed. These banks are federated with the state cooperative bank and enjoy remittance and other facility through the state cooperative bank to which they are federated. Everyone, please answer this question. Which are the following is not true? We have to select the incorrect statement, everyone. We have to select the incorrect statement, everyone. Please answer. We have to select the incorrect statement. Everyone, please answer this question. Which of the following statement is or are not true about the non-scheduled bank? Everyone, please answer this question, guys. Very simple, very easy question. You just answer. Everyone. Okay, first, non-scheduled bank are listed in the second schedule of RBI Act 1934. This is the wrong statement. Non-scheduled bank are listed in the second schedule of RBI Act 1934. They are not listed. The non-scheduled bank are eligible to effect borrowing from RBI for their everyday operation. False. Wrong. They are not allowed to have the borrowings with the Reserve Bank of India for their everyday operation. Okay. Now, they are not eligible to become a member of clearing houses, and as such, their customers are hindered in being unable to collect the checks. Proceed. That is correct. Four, they are federated with the state cooperative bank. That is also correct. So, if we have to choose the incorrect statement, only first and second are the incorrect statement. Third and fourth are the correct statement, everyone. Okay, so B is the correct answer. So, this is all about the non-scheduled bank. So, first is non-scheduled bank are not listed under the second schedule of RBI Act 1934. Their capital requirements are governed by Banking Regulation Act. They are not eligible to borrow from RBI for the day-to-day operation. They are not the part of clearing houses. Okay. And these banks are always federated with the state cooperative bank. Okay. So these are all the important features of the non-scheduled bank which I have given here. Everyone. Any doubt in this question? Any doubt in this question, guys? Yes or no? Any doubt in this question? Clear, everyone? Yes or no? Now, next, choose the correct statement regarding the local banks. We have to choose the correct statement regarding the local banks. First, each local area bank is registered as a private company under the Companies Act. However, they are licensed by the Banking Regulation Act 1949. The local area bank are scheduled bank. The minimum startup capital needed for having a lab is 5 crore. Everyone, please answer this question. Easy question, everyone. You have to answer this question. We have to choose the correct statement here. Everyone. Okay, Shiv, Shravani, knowledge, one sub. Everyone is answering one. Again, saying, again, just see, we have to choose the correct statement. Everyone, just read out the question carefully and then answer. We have to choose the correct statement. Just read out the question and then answer. Okay, first, each local area bank is registered as a private company. No, It is actually registered as a public company. So actually it is a public sector bank. They are registered under the Companies Act, licensed by the Banking Regulation Act. So first is the wrong statement. Local area bank or scheduled bank? No, they are actually non-scheduled bank. Okay. And sorry, the minimum startup capital for setting up a local area bank is fixed at rupees 5 crore. That is correct. So, first and second, these are wrong, and third is the correct statement. So, we have to choose the correct statement, everyone. So, correct statement is only. We have to choose the correct statement. C is the correct answer. Okay, everyone, you guys done? Yes or no, everyone? Okay, next question. Reserve Bank of India constituted a committee headed by whom to study comprehensive financial service for small businesses and low income households. The Reserve Bank of India constituted a committee headed by whom to study comprehensive financial service for small business and low income household. First, Dr. Nehikate Moore Committee, Raghuram Rajan, Manmohan Singh, and C.D. Deshmukh. So the correct answer is what, everyone? Please answer this question. Everyone, please answer this question. Easy question. You can all answer this question. Easy. You can all answer this question. Avinash, Shiv, knowledge. Everyone, please answer. The Reserve Bank of India constituted a committee headed by whom to study comprehensive financial services for small business and low income household. It was, yes, Dr. Nehikate Moore Committee. So yes, A is the correct answer. It was by the recommendation of Dr. Nehikate Moore Committee. Clear? Done, everyone? Good. Next question. We have to choose the correct statement regarding the payment ban. We have to choose the correct statement regarding the payment ban. Okay. First, they are universal bank. Second, they operate on a larger scale. And third, they need to have a minimum paid up capital of rupees 50 crore. Choose the correct statement regarding the payment bank. Everyone. Choose the correct statement regarding a payment bank. Everyone, please answer this question. You can all easily answer this question. Just read out the question carefully, everyone. Please answer, everyone. Choose the correct statement regarding a payment bank. We can all answer this question very easy, very simple. So you are all saying C is the correct answer. Let's check. Let's check it out. First, first is they are universal bank. First of all, wrong. They are actually called as differentiated bank because these are specialized in giving payment services to their customer. Second, these operate on a larger scale. False. These actually operate on a smaller scale. Third, it need to have a minimum paid up capital of rupees 50 crore. False. It needs to have a minimum paid up capital of rupees 100 crore. So none of the above is the correct statement. D. Shiv is correct. D is the correct answer. None of the above is the correct statement. Okay? Done? Now next question. We have to choose again the incorrect statement. Incorrect statement regarding the payment ban. Payment bank can accept the deposit up to rupees 5 lakh per customer. They can accept demand deposit in the form of saving and current account. They are permitted to issue both debit and credit card. Then they are permitted to handle the third party products like distribution of insurance and mutual fund. So you have to tell me the incorrect statement here. We have to choose the incorrect, means the wrong statement, everyone. Just choose the wrong statement, incorrect statement about the payment banks, everyone. Please answer. Choose the incorrect statement regarding the payment banks. Okay, first, payment bank can accept deposit up to rupees 5 lakh per customer. So that is wrong. They are allowed to accept the demand deposit from the customer. That is true, but not 5 lakh, 2 lakhs in the form of current and saving. Correct. So first is wrong. They are permitted to issue both debit and credit card first. They are only permitted to issue the credit cards. Sorry, only the debit card, not the credit card. So first, second is also wrong. Third, they are permitted to handle the third party products like distribution of insurance and mutual fund. That is also correct, right? So if we talk about the incorrect statement, first and second are the incorrect statement, and third is the correct statement. A is the correct answer, everyone. Done. Clear, everyone? Done? Yes or no? Yes, everyone. Can we move forward to the next question, everyone? Now, next question C. Which of the following statement is or are correct regarding the small finance bank? Now we have to choose the correct statement about the small finance bank. Choose the correct statement regarding the small finance bank, everyone. Please answer. The minimum paid up capital for setting up a small finance bank originally was fixed at 100 crore, but then it was increased to 200 crore. Small finance bank are not subject to all prudential norms and regulations of RBI, which are applicable to the commercial bank. Now we have to choose the correct statement here. Small finance bank. Avinash, Shiv, Swarna, Ame. Please answer, everyone. Knowledge, Dheeraj. Please answer. And please at least like and share the video, guys. Whoever is watching this session, kindly please like and share the video to the maximum you can. At least everyone. Okay. So first, which of the following statements is or are correct about the small finance bank? So the minimum paid up equity capital for setting up a small finance bank originally was 100 crore, but now it has been increased to 200 crore. That is correct. Second, small finance bank are not subject to all prudential norms and regulation. First, they are actually subject to all prudential norms and conditions as applicable to the existing commercial bank. So second is wrong. First is the correct statement. So we have to choose the correct statement. A is the correct answer. Everyone. We have to choose the correct statement. So A is the correct answer. Okay. Done. Good. Next question. Choose the correct difference between the cooperative bank and the commercial bank. Now we have to choose the correct difference between cooperative and commercial bank. Cooperative bank issues shares of unlimited liability. Commercial bank issues shares of limited liability. In cooperative bank, one shareholder has only one vote irrespective of the number of shares he or she may hold. But in commercial bank, the voting rights of the shareholders depends upon the number of shares he or she possesses. We have to choose the correct difference between the commercial bank and the cooperative bank. Everyone, please answer. Everyone. Correct difference between the cooperative bank and commercial bank. Okay, first, cooperative bank issues the shares of unlimited liability, while commercial bank issues the shares of limited liability. That is correct. Second, in cooperative bank, one shareholder has only one vote, irrespective of the number of shares he or she may hold. That is also correct. But the commercial bank, the voting right is determined by the number of shares they or she possesses. So both are the correct statement. Nothing is wrong. Both. We have to choose the correct difference, right? So both are the correct statement. Okay. Done. Done, everyone. Yes or no? Next, everyone. Mark the incorrect statement in relation to the merger of banks. Incorrect statement. Okay, first, Bank of Baroda, Oriental Bank of Commerce, Vijaya Bank has been merged to form Bank of Baroda. Union Bank, Dena Bank, Corporation Bank has been merged to form Union Bank of India. Canada and Syndicate Bank has been merged to Canada Bank, and Indian Bank and Allahabad Bank has been merged to Indian Bank. Incorrect statement regarding the mergers. Everyone. Incorrect statement regarding the merger. Everyone, please answer. We have to choose the incorrect statement regarding the mergers of the every incorrect statement regarding the mergers of the bank. Everyone. So we know that the merger happens first merger 1993, where New Bank of India merged into Punjab National Bank. Second merger 2019, Vijaya Bank and Dena Bank has been merged into Bank of Baroda. Okay, so Vijaya and Dena Bank has been merged into Bank of Baroda. So first statement is wrong according to this. Okay, Dena Bank has been merged into Union Bank of India. Second is also wrong. Now, see here, Oriental Bank of Commerce and United Bank of India actually has been merged into the Punjab National Bank. Then Allahabad Bank has been merged to Indian Bank. Syndicate Bank has been merged to Canara Bank. So, Syndicate Bank to form the Canara Bank, that is correct, and Indian Bank and Allahabad Bank to form the Indian Bank, that is also correct. So, these are the two correct. And Corporation and Andhra Bank has been merged to Union Bank of India. So, third and fourth are the correct statement. First and second are the wrong statement. We have to choose the incorrect statement here. So first and second means C is the correct answer. Good, everyone. C is the correct answer. Good. Any doubt here? If you have any doubt, kindly ask. No doubt, everything is clear. Good. Now, next question. Which following are the assets which are eligible for being invested in the maintenance of statutory liquidity ratio (SLR)? Cash, gold valued at a price not exceeding the current market price, investment in the specified instrument, which will be referred as statutory liquidity ratio securities, and any other security as directed by Reserve Bank of India. Not choose. Maintenance in the statutory liquidity ratio. Everyone, please answer. Following are the assets which are eligible for being invested for the maintenance of a statutory liquidity ratio. Everyone, please answer. Everyone kindly answer this question, guys. Following are the assets which are eligible for being invested in the maintenance of a statutory liquidity ratio. So cash can be invested. So SLR, what is first of all SLR? SLR, every bank has this condition that they have to deposit a fixed percentage of their total deposit with itself, and it can be in any form, either in cash or in non-cash, right? And statutory liquidity ratio is maintained according to the Banking Regulation Act 1949. Okay, so it can be maintained in the form of cash, gold, investments in other securities by RBI. So all of the above is the correct answer. D is the correct answer, not C. D is the correct answer, everyone. SLR, they can be maintained in any form. Okay, next, which was the first development financial institution that has been set up in India? The first DFI that has been set up in India. IDBI, Industrial Development Bank of India, SIDBI, Small Industrial Development Bank of India, ICICI, Industrial Credit and Investment Corporation of India, IFCI, Industrial Finance Corporation of India. The very first DFI which has been set up in India. The very first DFI that has been set up in India. Development Financial Institution, the very first DFI that has been set up in India. Everyone, please answer. So, when we are talking about the first DFI, the very first development financial institution that has been set up in India was IFCI, Industrial Finance Corporation of India. So, D is the correct answer, everyone. Done? D is the correct answer. Good. Next question. The core business of IFCI is Industrial Finance Corporation of India, the core business. To provide equipment finance, to provide finance for the rehabilitation of industrial unit, project financing, or all of the above. Core business. I am asking what is the core business of IFCI? Everyone, the core business of IFCI. The core business. Core business. See, all of the above are the business of IFCI. But if we talk about the core business, the main business of Industrial Finance Corporation of India is actually to provide the project financing. This is the core business. This is the main business of IFCI. So C is the correct answer, everyone, right? C is the correct answer. This is the core business. This is the main business of Industrial Finance Corporation of India. Clear? Done? Okay. Next. ICICI was established in the year 1975 at the initiative of Industrial Credit and Investment Corporation of India, was established in the year 1955 by the initiative of whom? World Bank, IMF, the Government of India, or representative of Indian industry? Everyone. You can all answer this question. Everyone. ICICI, Industrial Credit and Investment Corporation of India. ICICI has been established by the initiative of it has been established by the initiative of World Bank, Government of India, and representative of Indian industry. So A is the correct answer. Not with IMF. It was actually recommended at the initiative of World Bank, Government of India, and representative of Indian industry. So A is the correct answer. Done. Clear? Next question. Which institution is set up by ICICI to provide credit rating services to corporate sector? Which institution is set up by Industrial Credit and Investment Corporation of India provide credit rating services to the corporate sector? Credit rating services to the corporate sector. Easy question. You can all answer this question. Credit rating services to the corporate sector. Very simple, everyone. Very simple. Yes, if we talk about the credit rating, it is CRISIL, Credit Rating Information Service of India Limited. So B is the correct answer. Good, everyone. Now the last question. We have to choose the incorrect statement. SIDBI, Small Industrial Development Bank of India, has been set up in 1991 under the Act which has been passed in 1993. Now, it provide direct and indirect finance to MSME and help in expanding marketing channel for the product of MSME sector in the domestic market only. We have to choose the incorrect statement, everyone. We have to choose the incorrect statement, everyone. Choose the incorrect statement, everyone. Yes, first, when we are talking about the first, CDP has been established in 1990 and the Act has been passed in 1989. So, first is wrong. Second, it provides direct and indirect finance to MSME, especially in the domestic market. No, it is providing in the domestic as well as in the international market. So both the statements are incorrect. So C is the correct answer. We have to choose the incorrect statement. Both the statements are incorrect. Clear? So this is complete module C, everyone. I hope that you have all enjoyed this session. Guys, if you haven't subscribed this channel, kindly please subscribe this channel and press the bell notification icon, everyone, because this is the only channel in which I am taking all the marathon session. We have scheduled a marathon session for PPP module C also from 1 p.m. So kindly join that session also. From 1 p.m. we have the marathon session again for PPP module C. So thank you so much everyone. Thank you. Take care everyone. Thank you. Just please like and share the video to the maximum you can. Thank you. Bye bye. Take care guys. Bye everyone. Take care.